Closing costs are an unavoidable part of any real estate transaction because essential third parties provide services that need to be paid for. These include an appraiser, homeowner's insurance provider, settlement agents such as title company or closing attorney, lender, real estate agent, notary public, and more. With VA loans, the Department of VA has laid out some limitations which are designed to protect veterans from being overcharged, a commendable action by the VA. Unfortunately, the rules are often misinterpreted, leading to unintended consequences for veterans. How so? When sellers and real estate agents don't correctly grasp the intended rules, they may pass up on the VA buyer for conventional or FHA buyers, believing that by doing so they'll avoid certain restrictions that, in reality, do not even apply. This can lead to missed opportunities for veterans. In this video, we will make the rules clear so veterans have a level playing field during the home buying process while staying protected from unreasonably excessive charges. There are three categories, or buckets, of closing costs when we discuss a veteran buying with a VA loan. A. Fees the veteran can always pay, and these are itemized in the VA Lender Handbook. B. Fees the veteran can pay, but the cumulative sum of which cannot exceed 1% of the loan amount. C. Fees the veteran can never pay. Fees the veteran can always pay. The VA labels these itemized fees, and they include the following: appraisal fee, government recording fee, credit report fees, and flood zone determination fees and surveys. Other expenses the veteran can always pay, but which may vary based on the purchase price and loan amount, include prepaid items such as mortgage interest and escrowed money collected at closing for property tax assessments and homeowners insurance. Finally, the veteran can always pay certain title report-related fees such as title insurance policy, title examination, title search, and title endorsement and fees required to prepare title work, the VA funding fee if it's charged, a flat 1% lender origination fee, and pest inspection fees in states that have a state deviation from VA guidelines due to the high probability of infestation. Fees the veteran can pay that are limited to 1% of the loan amount. In order to understand which fees the veteran can pay in this category, we need to first discuss the lender's 1% origination fee compared to itemized fees, which we call third-party closing costs. According to VA, the origination fee is designed to cover all the lender's costs and services, which are not listed as itemized fees. For example, the lender may pay for the credit report fee and then pass on that fee to the veteran at closing. This fee is allowed because it's an itemized fee and not included in the origination fee. So the lender can charge that 1% origination fee and still collect money for the credit report. However, if the lender charges the 1% origination fee, certain other fees cannot be charged to the veteran, and while allowed, they would be considered an overcharge. Even though the VA Lender's Handbook never used the phrase non-allowable, the mortgage industry over time came to label these as non-allowables, which can be misleading because all such fees are actually allowable except that they are limited to 1%, and these are known as non-allowable. In other words, certain fees only become an overcharge and therefore not allowed, aka non-allowable, when a lender has charged a 1% flat fee, aka origination fee. But what if the lender does not charge an origination fee, or does charge an origination fee but it's less than 1%? In these cases, any other fees not labeled as allowable under the itemized fees bucket can be charged to the veteran, so long as the sum of lender origination fee plus other fees does not exceed 1% of the loan amount. Here are some examples. On a $400,000 VA loan, the lender is charging $4,000 in origination fee. The veteran cannot pay any fees not itemized by regulation. On a $320,000 VA loan, the lender is charging a flat $2,000 origination fee. The veteran can pay any other fees up to $1,200 max. This is because the two would add up to $3,200, which equals the 1% cap. Here's a list of the usual fees categorized as other origination fees, which the industry has labeled non-allowable. It doesn't include everything, but it covers most of them. Lender fees to include loan processing fee, underwriting fee, admin fee, document prep fee, loan application fee, wire fee, mortgage broker fee, and any lock extension fee, etc. Third-party processing fees, notary public fee, settlement agent fee, sometimes known as escrow fee, tax service fee, title company fees other than title insurance, fee for second appraisal if ordered by lender or other party, not the veteran. However, in those states where the pest inspection is not required but is recommended by the appraiser, These fees are not considered in this not allowable group, but rather are considered an allowable third-party charge, not an origination charge. It's important to note that discount points to buy down an interest rate do not fall under the 1% origination fee cap. VA's handbook says the amount charged must be quote-unquote reasonable. This is usually interpreted as no more than 2%. And so it would be considered customary for a veteran to be charged a 1% origination fee plus 2% discount points if the veteran chose to buy down the rate. If these other fees added to a lender origination exceed 1%, the veteran does have the option of shifting those excess charges to the seller's side of the transaction to be paid by the seller. As long as those fees are displayed on the seller's column on the final closing documents, VA guidelines are met. Let's look at an example. On a $380,000 purchase price, the lender is charging $3,000 as an origination fee, and the itemized fees add up to $2,000. But other fees, those that are not itemized, such as escrow settlement fee, third-party loan processing fee, etc., add up to $2,500. The veteran can pay the $2,000 itemized fees with no issue. However, the veteran cannot be charged the $3,000 origination fee plus $2,500 in other fees for a total of $5,500 because that's $1,700 more than the 1% limit of $3,800. The veteran could negotiate, however, through their real estate agent to have the seller pay $1,700 of the $2,500 allocated to the seller's side of the closing documents, and the deal can proceed to closing. Fees the veteran can never pay. There are only a handful of these, but they are important to note. Prepayment penalty. When the VA loan is refinancing some other type of loan, if that other type of loan has a prepayment penalty, the proceeds of the VA loan cannot be used to cover those. Attorney fees that are for lender's purpose. The veteran can only be charged closing attorney fees, and those are in those select states that use closing attorneys. The lender cannot impose attorney's fees on the veteran. Still, the veteran can cover reasonable costs for title examination and title insurance, as these are approved fees under the umbrella of itemized costs. The VA does not discourage veterans from seeking their own legal counsel if needed, however, and the veteran can choose to pay that attorney that would represent the veteran. In closing, when you as a veteran hear real estate and lending professionals throw around the phrase non-allowable fees, don't immediately jump to the conclusion that those are fees that should never be charged to the veteran. Except for a handful of fee types, all fees are allowed or allowable, but they have to be calculated in context. Itemized fees can be charged without a limit, as long as they're customary, reasonable, and bona fide. Then there are other fees, which don't fall under the itemized fee category, and these are the ones VA regulation seeks to control. Those fees cannot exceed 1% of the loan amount.